What's good, guys? Today I'm going to be going over some charts and kind of build it in with how I find a high confidence setup. This was a choppy week, and one of my favorite trades that I took this week was on Caterpillar. So I took this trade on Monday and I got a 21% return playing it to the downside. Coming here, this is the daily for Cat. So what I look for is I looked at previous zones, and if you see, we are like high, right? I mark out a key level. This was the previous high at 238.42, and we reached that level, right? If you see here, I took this trade on Monday, November 28th, on this day. So before this even happened, what I saw was here we attempted to break all-time highs and we failed, rejected off. You see the wicks, we reject off, come down, we try it again, attempt, and we reject. And that's terrible, right? That shows that this is weak. I wanted to take a trade. After seeing the gap down, we saw how weak it was in the morning. So I marked down that key level. There, I found my trade. I knew that I wanted to play this to the downside. I had my conviction from a higher time frame, which makes this even higher confident because you're playing this from what's being carried out in a higher time frame, which in this case is the daily, right? So then I move on to the hourly. And what I want to look for on the hourly and 30-minute time frames is I want to see big gaps. I want to see price action move quickly to either side, up or down. So when I'm looking at the 30-minute and the 1 hour, I want to see places where there's big gaps, upside, downside. I want to see areas where price action moves quickly, because when you're like taking intraday trades, you want to gain exposure to quick moves, not moves that take hours or days to play out. So with a quick glance, I use the volume profile right here. I see that there's an area where price moves pretty quickly. So now from there, I'm going to start putting out key levels. So my first key level would be about right here. Why? Because if you look here, this was an area of previous support, right? We have support right here. You can see from the big wicks, you see those multiple wicks to that side rejecting that area, that turned into resistance right there, and then it turned back into support here. So this is a key level, and from there you want to make that into a zone, because that level by itself will not always fully get hit. So from there, to add a little bit of a bigger zone to look at, I put the next key level at the body of these candles with the wicks up. So from the wick to the body is a key level that I'll be looking at. That's a key level. Now I need to play out my game plan. And before you even go into a trade, you need a game plan. So I looked at the daily. I knew that this was weak. I wanted to play this to the downside. Now I'm moving into the hourly and the 30-minute, and I want to find a place where I want to see a retest and reject to play to the downside. I want my entry as close as possible to my risk level. So right now, I'm playing out. I took this trade on November 28th, so right here, right? Previously, I am stuck. The price is right here, right at this key level support. I want in my game plan to be that I want to see the next day the price come up, retest this area. If we gap down, I want to see a retest. If we're still above this, I want to see a breakdown, retest and reject off this key support zone. Another key point I want to make is you got to define your risk level. The reason why I say you want to wait for a retest is because you want to buy as close as possible to the entry point on a retest, not a gap up, not in the middle like right here. Because when you're as close as possible to your risk level, this allows you to reduce your risk. What would be my risk level right here? My risk level would be a little bit higher than this zone to give it a little space for the trade to move. This is a key area. I want to see this turn into resistance from previous support. Previous support turning into resistance. So boom, we got our key level, what we want to look for in the game plan, and our risk level defined right there. That's how you make a game plan. But we're not done yet. Next, I'm looking for key target areas. So right here, I see one at 232.55. Why? Because that is the next level of support that I'm seeing down here. If you look at the volume profile, this is where the volume starts ramping up in the price, the volume at the price. And right here, we see a little rejection come up, find support right here. We broke down all those wicks clumped up in that area, clumped up in this area, but that's after, but you kind of get the point. And what's my game plan? I saw that on the daily, CAT was weak. We rejected twice off all-time highs, and I want to play a retest and reject off the previous current support area. I took the trade November 28. This was the current support area. I was waiting for this area to turn into resistance. My risk level is right here. If it violates this, I am out of the trade. My target area is right here. Now let's look at what I actually did. So if you take a look, I scaled in starting 934 and I finished scaling into the position by 1030. And usually during intraday, I'll look at 15 and 30 and 5. Right here, right? This is the day of. I have my game plan set out. I have my key levels marked and I know what I'm going to do. First candle comes up. This is a 15-minute candle and I wait for the close and I see that it rejected hard. So I'm not fully confirmed in the trade because I would rather enter right here after a retest and reject. So what do? I take 1/4 of my position. I'm scaling in starter size. 940 comes around. I add another one. And then I add two more, 1022 to 1026. So that would be around this candle. See, this would be my ideal entry point. I scale in, but not fully until I get that confirmation. Take a look. This is the key zone that I planned out, right? This is a key support area that I want to see turn into resistance. Support turned into resistance for the downside. Resistance turned into support for the upside. And what happened? We got a big push on the next candle. We pushed up. We even broke into that area with the wick. And then bam, big red candle when we closed below the previous candle. So now I got my confirmation. I got that retest and that reject that I've been waiting for, that we should be patient to see. I get my entry point as close as possible to my defined risk area. So that way I'm not, I don't enter in here. Right? Now I sit back, let the trade run as smoothly and stress-free as possible. If it violates my risk level, I'm out. I scale out as we head towards my target level. Let's see what I did next. So this was a slow trade, man. Like this stock does not move like Rivian, Tesla, those more volatile stocks. So I was just chilling in this trade, really. There was not much to do with this choppy week. And look, I entered at 10:30 and I exited around 3 p.m. The longest trade of my life. Slowest trade of my life. I'm usually in trades for like 10 to 30 minutes or an hour max. This was like a 4-hour or whatever. Okay. Anyways, I scaled out first. I scaled out half at 3 p.m. Where is 3 p.m.? 3 p.m. is right here. Why did I scale out? Remember, I marked this level as a key target level because it was previous support. I scaled out right here. I saw that level break. I waited for this candle to close because it was going up past that level, breaking up, and I waited for it and I saw that rejection, right? So that gave me the conviction to hold my runners a little longer, and then I scaled half just to take off profit. And I can't stress this enough. Lock in profits and wait and leave your runners to squeeze out the winners as much as possible. Get your bread. Last two runners, I exited 304 and 314, which was like right around here. 304 was in this candle, 314. So, damn, I caught the bottom. So yeah, that's a little rundown of what a high confidence A+ high probability setup looks like. It's not taking lottos, entering in without a plan. Netted a 22% return, high confidence setup. Yeah, the numbers might not be as big, but you keep doing this and you keep following this routine, your numbers are going to add up as you size up. This is TradeZella. This is great, honestly, to kind of recap your trades, look at where you started entering, where you started exiting. They even got a little chart here to see option prices move according to how the price moves. This is the running P&L during the trade throughout. So you see how I was red almost until like 2 p.m. I was only green the last hour. Your trade won't work out right away sometimes. Every trade is different. But as long as you follow your game plan, you'll be alright. This could have been a loss too, but that's fine. Follow your game plan. Find those great setups. Stop trading shit setups, lottos, all those, and take 1 to 3 high quality setups a day. And I trust you'll be fine. Alright, that's all for me. This was a quick recap. Hope you enjoyed, and catch y'all.